Welcome to Crypto 101, a first principles jargon-free course on blockchain and its impact on financial services. We are in the process of learning how cryptocurrencies mimic the properties of fiat money. In this lesson, we will learn about crypto wallets and the functions they perform. We will learn what role hardware wallets and seed phrases play in ensuring security of private keys. We will discuss the relationship between wallets and blockchain nodes. We will conclude with the distinction between wallets and block explorers. So far, in this course, we have been learning about how cryptocurrencies mimic the four properties of currency. The properties that we have discussed so far are segregated accounts and account security. In this lesson, we will take a little break from our discussion of these four properties and learn about crypto wallets. In the previous lesson, we learned about the two major workflows by which Bitcoin works. The first is the account opening workflow by which a new Bitcoin address is acquired. The second is the payment workflow by which a payment is made. What we have learned so far in this course is only a theoretical description of the workflow. How does all this actually occur in real life? The rest of this lesson describes how these workflows occur via a software application called the crypto wallet. So far, we learned that Bitcoin addresses are simply large numbers that are analogous to bank accounts. We also know that transactions between the addresses are recorded in the Bitcoin blockchain. The Bitcoin blockchain is a network of about 10,000 computers that records Bitcoin transaction data in a duplicative manner. But what is the user interface for an end user seeking to acquire a Bitcoin address or make a payment? The crypto wallet is a popular user interface. So far, we have been learning about what is happening under the hood of the car. In this lesson, we will focus on the exterior of the car. The term wallet conjures up an image of either a physical wallet or a digital wallet on our smartphone. In this lesson, we will learn about crypto wallets, and at the end of this lesson, we will assess how different or similar they are to our legacy conception of wallets. There are many wallets available in the market. For the purpose of this lesson, I will demonstrate the popular Exodus wallet. I go to their website and download the wallet for free. I can download to a desktop, mobile, or both. In the previous lesson, we learnt that the Bitcoin address was generated through generation of a random number and subsequent mathematical transformations on it. The wallet software did all this, behind the scenes, when I downloaded it. Next, taking the Exodus wallet as an illustrative example, we will learn some features of crypto wallets. The wallet is downloaded onto my hard drive. You can see that the wallet holds a small amount of Bitcoin that a friend sent me. What is my Bitcoin address? I can click on the Receive Bitcoin. This will show my Bitcoin address. If I want to receive Bitcoin at this address, I can simply email the address to the sender. You can see that so far 2 transactions have occurred on this Bitcoin address. The transactions that you see on this wallet app are actually recorded on the Bitcoin blockchain, the network of computers or nodes that we learned about earlier. I can copy the Bitcoin address and paste it on the search bar of the website Blockchain Explorer and see the transaction history associated with this Bitcoin address. You can see on the website that this address has transacted twice. The transaction history associated with a blockchain address is public information. An easy way to conceptualize the crypto wallet is that it is a software application that is interacting with a network of computers called the blockchain. For example, the crypto wallet connects to one of the computers on the blockchain network and asks the question, what is the transaction history associated with this blockchain address? It pulls back the data and displays the answer to the wallet owner. The wallet company must have an updated copy of the blockchain at all times. It could either run one of the nodes on the blockchain or connect to a node run by a third-party service provider. At this point, we will revisit the concept of the blockchain network. We discussed earlier that the Bitcoin network consists of nodes or computers connected to each other, either directly or via peer nodes. The Bitcoin network is known as a public blockchain because anyone can connect their computer to this network by downloading the Bitcoin software. However, Bitcoin is not the only public blockchain. Another example of a public blockchain is Ethereum. We can now revisit the 3 dimensions of crypto assets and how they apply to cryptocurrencies. Examples of a token is Bitcoin. It is a currency token. The network that records Bitcoin transactions is the Bitcoin network. Ether is another currency. The network that records transactions of Ether is the Ethereum network. We can now draw an analogy between crypto and fiat money on the 3 dimensions. The cryptocurrency is equivalent to fiat currency like USD and GBP. The blockchain address is analogous to the bank accounts because it segregates and tracks the ownership of cryptocurrency. The blockchain network is analogous to the banking system of the currency issuing authority. US dollars are created and transact within the US banking system. British pounds are created and transact within the British banking system. Similarly, Transactions that create Bitcoin and transfer existing Bitcoin between addresses are recorded in the Bitcoin network. Transactions that create Ether and transfer existing Ether between addresses are recorded in the Ethereum network. We can now go back to our crypto wallet. Earlier, we saw the Bitcoin address of the wallet holder. If we move to another currency, Ether, we can similarly see the Ethereum network address of the wallet holder. Just as we did with the Bitcoin blockchain, we can view the address and associated activity on the Ethereum Explorer on the Internet. The installation of the wallet software on a desktop or mobile represents a simple account opening workflow. The wallet software does the underlying math to generate the private key, public key, and blockchain address. The wallet software can also execute the payments workflow. Next, we will see a demonstration. The wallet gives me a neat front end from which I can make a payment. I can go to the screen where my balance is displayed and send a payment, similar to how we make payments from our online banking portal. We will cover the act of making payments in more detail in the upcoming lesson. However, at this point, we can note that the wallet software creates a digital signature behind the scenes when we make a payment. While we can use the wallet as a user interface for making payments, we also need the private key of the blockchain address for two reasons. First, it is needed to authenticate the payer's identity, similar to passwords and PINs in traditional banking. Second, we learnt in the previous lesson that transactions from a blockchain address requires the transaction to be digitally signed. For a software program to create a digital signature, it needs the private key. A transaction without the digital signature is like an unsigned check and won't be accepted as valid by the blockchain network. If the private key is needed for making payments, where is it held? Next, we will learn how wallets store the private key. Note that different wallets function somewhat differently. However, we are not trying to learn about individual wallets in this lesson. Rather, we are developing a high-level understanding of what a crypto wallet does. To view the private key associated with the Bitcoin address, I click on this link in the wallet. For the purpose of maintaining confidentiality, I will stop the screen share. Instead, I will show you an obfuscated screenshot of the screen that would appear on clicking this link. On this screenshot you can see that the wallet provider has generated 4 Bitcoin addresses for me. I got these Bitcoin addresses when I downloaded the wallet. Associated with each of these Bitcoin addresses are the private keys. I have obfuscated the Bitcoin address and the private keys in the screenshot for privacy reasons. In reality, it is only the private key that is secret. Remember, the wallet I am using right now allows me to hold cryptocurrencies other than Bitcoin. I can follow the same process that I followed for Bitcoin and see the Ethereum addresses and corresponding private keys. For confidentiality reasons, I will pause the screen share here. Note that my Ethereum address does not hold any currency right now. Most banks will not allow us to hold zero-balance bank accounts, at least beyond a short period. But in cryptocurrencies, we can get any number of addresses and these might have zero balances. If we think from a data perspective, what the crypto wallet contains is information on the token held by the wallet holder, the blockchain address where the token is held, the name of the blockchain network the address relates to, and the keys associated with the blockchain address. The wallet can hold hundreds of such addresses and private keys. The piece of information that the wallet uniquely holds is the private key. It doesn't actually hold the cryptocurrency. The value of the cryptocurrency is held in an address recorded within the blockchain. The wallet software only reports the amount recorded in the network. Think of a digital wallet like Apple Pay, which contains details of debit cards and credit cards. The value is held in the account numbers associated with the cards and not within Apple Pay itself. Hence, there is similarity between digital wallet apps and crypto wallets. Let us now answer the original question. Where is the private key held? The wallet-generated private key associated with my blockchain addresses is stored on the hard drive of my desktop or the mobile phone that I downloaded the wallet to. It is not stored in the blockchain network, and most wallet companies do not store it in their servers. Now is a good time to get familiar with a commonly used term called on-chain. On-chain refers to any data that is recorded on the blockchain network. For example, transaction history is maintained on-chain. Private key is not maintained on-chain. This brings us to two challenges that wallet holders face with respect to private key. First, what if the phone or computer on which the private key is held got hacked? Second, what if they lost the phone or computer which holds the private key? Next, we will explore some solutions available to wallet holders. For a system to get hacked, it needs to be connected to the external world via the internet. Cold storage refers to keeping private keys in an offline mode, which could mean either maintaining private keys on a piece of paper or on an offline device. But such cold storage means that you have to manually key it in every time you make a payment. This is inconvenient since private keys are far more onerous than passwords. Next, we will see a solution that balances convenience with security. One approach to prevent the private keys from getting hacked is the use of hardware wallets. For illustration, I will take the example of a popular wallet called Trezor. Trezor has a desktop wallet, just like the Exodus example we reviewed. It is paired with a hardware wallet that is disconnected from the internet. The desktop app does not hold the private keys. The private keys are stored in chips embedded in the hardware wallet. The user enters the payment transaction details in the desktop app. For a brief moment, the desktop app connects to the hardware wallet. The payment details are transmitted to the hardware wallet and comes back into desktop app with the digital signature. The payment message is then broadcast to the blockchain network. Remember from our previous discussion, till the point the payment message is broadcast, one does not need to be connected to the internet at all. This brings us to a security design principle. The separation of the signature generation step from the submission of the transaction to the blockchain network means that the device that stores the private key need not be the same device that broadcasts the transaction. The signature generating device can be offline while the transaction broadcasting device is online. We now know that private keys can be stored on mobile phones, desktops, and hardware wallets. Even if we kept these offline to protect against hacking, one can simply lose these devices. An old-fashioned solution is to write the private keys, public keys, and blockchain addresses down on a piece of paper as a backup. This is a form of cold storage. The problem is that it is not easy to maintain paper records, especially if one owns multiple private keys. A solution offered by wallet providers is that of seed phrases. A seed phrase is a set of random words generated by the wallet software at the time of setup and acts as a master key to all private keys. The seed phrase can be used to restore the wallet to another device. Below is an example of a 12-word seed phrase. Seed phrases can be longer. Of course, the wallet holder can end up losing the seed phrase. But writing down one seed phrase that consists of English words is easier than writing down multiple private keys in an exotic representational format. The seed phrase is created when the wallet software is downloaded to the hardware. The software selects a random phrase consisting of words picked up from a dictionary. Then the phrase is converted to a number using certain mathematical logic. We can call this the master key. Remember, we had learnt that the private key is a random number chosen between 1 and a very large number. In a seed phrase solution, instead of randomly choosing that number, multiple private keys are derived by applying mathematical functions to the master key. One seed phrase will result in a unique set of private keys. Now we can map the flow of numbers. We have a master key that is derived from the seed phrase. Then a set of private keys are derived from the master key. The derivation of the public key and blockchain address from each private key is exactly the same as we discussed earlier. The seed phrase allows access to the blockchain addresses and the associated private keys across devices. The reason is that each time the relevant mathematical functions are applied to the seed phrase, the same blockchain addresses and private keys are derived. The seed phrase acts as a master key that allows access to all private keys. The mathematical functions deriving the private key from the seed phrase is chosen by the wallet company. On the other hand, the mathematics underpinning the conversion of private key to public key and blockchain address is universal for a specific blockchain network. Protecting the seed phrase is critical for crypto asset security. We can distinguish between random wallets and seeded wallets. In a random wallet, each private key is independently generated. Such wallets are inconvenient since user has to maintain a backup of each private key separately in case of loss of hardware. In a seeded wallet, all private keys are generated from a seed phrase. Such wallets are more convenient, but there is greater financial risk if the seed phrase is stolen or forgotten. We can now summarize the challenges of private key storage and solutions. If you are concerned about getting hacked, you can store your keys on paper or offline device. Alternatively, you could use a hardware wallet that remains offline except for brief moments when it signs payment messages. If you are not very concerned with getting hacked but more worried about losing the hardware on which private keys are held, you can use cold storage on paper as a backup. But record keeping on paper is challenging. Hence, another option is the seed phrase solution of wallet companies. Despite all the above solutions, you could still lose the private key. For instance, the paper on which the private key is written could be lost. No solution is foolproof and solutions will keep evolving, some stronger than others. Ultimately, the amount of money and effort a user will spend on a solution is dependent on whether she has $1,000 or $1 million in crypto assets. When we initiate a payment using the wallet software, the transaction is sent to a node on the blockchain network. From that first node, it is propagated to other nodes. There are three possibilities. The node may be run by the wallet company itself. The wallet company may be using the node of a third-party service provider. The payer may be running her own node. She uses the wallet software to generate the payment message and digital signature and routes the payment message to her own node. Running a node requires a relatively high level of technical proficiency and hence, most people don't run their own nodes. It is now time to recap what a wallet does. We can think of the wallet as performing two categories of functions. First, it holds the private keys. Second, it acts as simplified user interface for transacting on the blockchain. The two functions can be decoupled for security-oriented customers, with the private key held in a hardware wallet and the transactional user interface in the software wallet. Next, we will recap the highlights of each of these functional categories. The wallet's primary function is the secure storage of private keys associated with blockchain addresses. Wallets can hold the private keys of one or multiple blockchain networks. We can revisit the answer to the original question on where the wallet-generated private key is held. We can amend our original answer. There are two options. 1. It could be stored on the hard drive of the desktop or the mobile phone the wallet software was downloaded to. 2. It could be stored on a separate hardware wallet. The above two options also apply to the seed phrase, which is effectively a master private key. The wallet, in addition to holding private keys, acts as a simplified user interface to generate the three identifiers, namely the private key, the public key and the blockchain address. The mathematics of generating a private key and transforming it to a blockchain address is all done behind the scenes by the wallet software. The wallet also allows us to easily view our crypto assets in one place, even though the tokens may be recorded in different blockchains. Finally, the wallet provides a simple interface to make payments and generate digital signatures using the private key of the wallet holder. During this course, we have often gone to websites to explore blockchain transaction history. We went to blockchain.com to explore Bitcoin history. We also explored the Etherscan website. These are called block explorers. Block explorers are web-based interfaces that allow users to query blockchain networks and retrieve data on activity. This brings us to the end of this lesson. Next, review the lesson summary and proceed to the next lesson.